A and B are two partners sharing profits and losses in the ratio of 3:2. And this was the balance sheet of A and B as on 31st March 2010. On asset side, goodwill 5,000, building 40,000, cash 10,000, profit and loss count 5,000, furniture 20,000, total 80,000. Maybe it's a new thing for you. Goodwill is already there, rupees 5,000. It is called already raised goodwill. What it means? Before the admission of C, the goodwill is already lying in the balance sheet on asset side. It means the already raised. It means this year or 2 years ago or 20 years ago, A and B created or raised goodwill account by rupees 5,000. It means they must have passed the journal entry goodwill account debit to A's capital to B's capital. That's why this goodwill is lying in the asset side. This situation is called already raised goodwill. Now on liability side, A's capital 30,000, B's capital 30,000, reserve fund 10,000 rupees, creditors 10,000, total 80,000 rupees. C comes as a new partner for 1/4 share. He brings 20,000 as capital and 5,000 as goodwill. Building was appreciated by 20%, furniture was depreciated by 10%. And you have to prepare new balance sheet after admission of C. Be careful. When I am passing journal entries, I am not writing down any narration. The reason being, I want to make the concepts clear to you. But when you are appearing for the exams or you are doing your homework, you must write down the narration for the journal entries. So we are going to take the same steps. First of all, set the ratios. For ABC, old ratio 3:2, sacrificing ratio 3:2, new ratio 9:6:5. Now we'll start journal entries. First of all, distribute all the accumulated profits. And accumulated profits are always on the liability side. Is there any accumulated profit? Yes. Reserve fund rupees 10,000. So journal entry will be reserve fund account debit to A's capital to B's capital. 10,000, 6,000, 4,000. It has been distributed between A and B in the ratio of 3:2. That is the old ratio. Now distribute all the accumulated losses. Is there any accumulated loss? In the balance sheet, yes. On asset side, there is profit and loss 5,000. We have to remove it. Means A's capital account debit, B's capital account debit to profit and loss count. 3,000, 2,000, 5,000. It has been distributed between A and B in the old ratio of 3:2. Now, there is already raised goodwill at rupees 5,000 in the balance sheet. If you find any goodwill in the balance sheet of old partners, you must write it off. The reason being, when the new partner enters the firm, he wouldn't like to keep it. Because if this goodwill is written off in future, so C will also be debited due to writing off. So naturally he wouldn't like to take this risk. He would ask the old partners to remove this goodwill from the balance sheet. So you have to write off this goodwill account. It is on the asset side. It means this goodwill account is carrying debit balance. If we want to remove it, we will have to credit this account. Means goodwill account will be credited. And then who will be debited? Naturally, A and B. So journal entry will be A's capital account debit, B's capital account debit to goodwill. 3,000, 2,000, 5,000. This goodwill has been written off in the ratio of 3:2. That is the old ratio. And I would like to remind you again, if you find any goodwill on the asset side, it must be credited. Technically speaking, it must be written down or written off. So the journal entries, old partners capitals accounts debit to goodwill account. Now let's move to the revaluation. Building has been appreciated. So when asset is appreciated, it means we want to increase the value of the assets in the balance sheet. It's a gain. So whenever there is gain, revaluation account must be credited. So the journal entry will be building account debit to revaluation account rupees 8,000. So we have credited revaluation account. It's a nominal account. If we credit the nominal account, it means we are creating profit in the books. And building has been debited. It means building is an asset and it is carrying debit balance. If we debit building account, it means we are going to increase the value of building by rupees 8,000 in the books. Now furniture depreciated by 10%. 10% of 20,000 means 2,000 rupees. Our asset is going to get reduced. If asset is decreased, it's a loss. So in that situation, we debit the revaluation account. So journal entries revaluation account debit to furniture rupees 2,000. So we have debited revaluation account. It means we have created loss. Number 2, we have credited furniture. Furniture is an asset. It carries debit balance. If we credit any asset in our books, it means we are decreasing the value of that asset in our books. Now leave the space for one journal entry because we don't know whether there is net profit or loss on account of revaluation account. When we prepare the ledger, then we'll come to know whether there is profit or loss. Now the journal entry of incoming partner, he is bringing 25,000 rupees. So journal entry will be cash account debit to C's capital 25,000 rupees. C's capital to A's capital to B's capital. This is the adjustment entry for goodwill. You know, adjustment entry of goodwill is always passed in sacrificing ratio. And the sacrificing ratio is 3:2. So the amounts will be 5,000, 3,000 and 2,000 rupees.